Hello everyone, this is Teddy Keck7 Forex Trading Unlocked, and we are here with a Forex market daily market analysis for you and live trading webinar, and we're going to go over what's going on in the major foreign currency crosses for you today. First, we're going to pull up our disclaimer to remind you that this webinar is for illustrative and educational purposes only, and that is it. So please do not try and copy these trading examples or what's going on, because everything here is in the past, it's delayed, so you were behind the curve. So use this as an educational stepping stone. With that, let's go to our live screen. We're at the Forex-Trading-Unlocked.com website, and we have the home page pulled up. Let's go to our market analysis page, and we have the workstation page pulling up right now, slowly. There we go. Okay, so we're going to skip past the numbers for today. We're going to go right down to the Euro-US dollar chart. Get rid of that. It's now loading. Now the Euro-US dollar gave us a nice little sell signal with a bearish engulfing line the other day. So we're going to put this right here. Let's get our little arrow here and show you what I mean. This down day right here was right here. We peaked out last Wednesday, and then last Thursday we had a nice little sell signal. This is a bearish engulfing line. Since then, we have come off that high. We made a low. We bounced back a little bit this week, set a lower move high, and now we're making lower move lows today. So right now we're in the middle of the session, but the market is still under pressure. We're seeing the dollar bulls get a little bit more of a lift today, not much, but right now pressure is definitely on the other currencies, with the strength being in the US dollar. Now we also had the British pound US dollar that had a sell signal last week simultaneously. Ironically, this is also a bearish engulfing line. This market also had made a higher move low, then made a lower move high, and has now made lower move lows today. Today, the pound is still hanging near its lows and is showing that the dollar bulls are definitely trying to drag things back towards where the common ground was for the past couple of months. Remember, the dollar has been under pressure for literally the past 4 weeks, up until it turned a week ago on Thursday, and since then it's been trying to put up a little corrective fight. So that's the question: is the dollar just correcting, or is dollar strength starting to rear its head once again? So right now we have this bearish engulfing line here, sell signal that is still going on. The nice thing is that we had this nice little trend here that obviously was broken today. So this is kind of a big deal. So now we're starting to see some negative signals going on as far as these other currency cross rates. You can see, even if we come all the way back to the low back in March and we come back to here, oh, look at this, it runs almost coincides completely with these right here. So we can even remove this line right here. So as you see today, we are trading below the rising upward sloping support line that's been holding this trend intact, putting this market back on the neutral to negative path. So right now we will see what's going on with this. Let's see, we can put this trend line right here, from here to here. That one coming in. We could even go further back. Let's go to this. There we go. I like that. Okay, so now we are wedging from the long-term bearish trend to the short-term bounce that we've had since the middle of March. It has had us in a neutral to bullish posture, and now we are failing. So we'll see how things continue. I would say that you want to use, if you are a bear, this last lower move high as a good risk area. For the trade here, for the signal that we have from the bearish engulfing line, it's really this last high. This would be the big one, because especially if you cross this downward sloping resistance line, it's been coming in for months, and then cross this $28.23 barrier, that would be an upside breakout point for sure. That would have this market really, really, oops. Okay, so there's our sell signal, and then let's move this over here. So any rally above there would be a positive bullish sign, and anything below here keeps this market obviously in a negative to neutral to negative posture. So the pound is definitely looking weak. Let's look at what's going on with this US dollar Swiss here to wrap up our European currency cross connection. As you can see, we set a nice little bottom here last week as well. This was another high probable Japanese candlestick pattern, just like the two bearish engulfing lines, which, by the way, if you want to learn how to trade those patterns, the high probable Japanese candlestick patterns, the one way you can do it is by going to Amazon.com and either buying the paperback version or the Kindle version of high probable Japanese candlestick patterns. And through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. So with that, let's get back to our chart, and we're going to use this low there and this high right here as our breakout points. Any failure from here negates. This here is a 3-day buy pattern, which is a high probable Japanese candlestick pattern, one that you can read about in the book. So we've already pointed out two. This is a third one and a third market that is in play right now. So this last lower move high will be, which is right here. This is going to be our upside breakout point at 95.59. Right now, as you can see, the market's been consolidating, and we'll have to see which way it goes. The other currencies, the euro and the pound, obviously are falling to the dollar, so we'll see if the Swiss can stay neutral. Even if we get a rally back up above this 96 to even 97 area, this doesn't put us on a bullish path. It just puts us back into this consolidation range that we were in for months. That's probably what we're seeing right now, is not necessarily a big show of dollar strength, but a fact of dollar neutrality, bringing things into a balancing area. Let's look at the Japanese yen versus the dollar. Now, this is the funny thing, is that for some reason, the Japanese yen and the US dollar have been going contrary to what all the other currency crosses are trying to do for months now. This one here has been a troublesome trade. It tried to break out to the upside a week and a half ago. Then we had this sell. It was kind of funny. We had this. This is a high probable Japanese candlestick pattern here. It is low, followed by these two up days. This is a 3 inside up days. This is one of my favorite buy patterns. That one worked out really, really well. Hit the target and brought us up right into this sell signal here, this bearish engulfing line, which now has touched the higher part of the area. So the question is will this low hold right here? So this is a very critical low. Trading below here doesn't necessarily make this market bearish. I would say that it would be a failure from here, taking out this low here at 106.53. That's the key low to watch. This low here at 106.59, this area here is a short-term pressure zone. We fail from here. Obviously, it's going to make the bears start to salivate, but I don't know if we're going to really get much there. If you can see, there's been so much consolidation and tight range trading, and this is what we're kind of going into. It's only when you get above 108 that it seems like this market seems to get active, as you can see everywhere on this chart, or if we happen to get below 106.53, which would be down in this extreme here. But this is when we were going through the height of the coronavirus stuff. So unless we have a second wave coming and Asia really starts to get hit, I don't think that that's what we're going to see. But this market is obviously in a big consolidation pattern. Very hard to judge where the US dollar yen is going. But I think for the most part, it's going nowhere. It's just a very big, wide range trade with us, and some decent swings, but otherwise very grindy, horrible days. Now we have the Australian dollar, US dollar, which is starting to try and show whether it's going to be a neutral trade developing here, because the bulls seem to be running out of steam, or whether or not a bearish trade can evolve. Now, the one thing that we can see here is that when we started this rally here, over the past couple sessions, look at what we did, especially today. We're trading below this. So we'll key off of the recent high as well as this last lower move low as our breakout point to the downside for any bearishness. This confirms bearish, at least bearish sentiment for a little while, that will probably have this market dropping down to the 66, even down to the 64-cent level. We'll have to see. We got to get below this, take out this low first. And remember, if it takes out this low, that means that we'll have made a higher move high, a higher move low, then a lower move high, and a lower move low, which confirms a neutral to bearish short-term trend. Let's look and see what's going on in the New Zealand dollar, US dollar, because this market has been trading kind of in tandem with the Australian dollar, US dollar. And let's see what's going on here. All right, the New Zealand dollar, US dollar, pretty much looking the same as the Australian dollar. It's the same situation. We're going to watch for newer move lows or a taking out of the previous high. Right now, it looks like it's running out of steam. So let's go now and start to look at some of our lesser currency crosses around the world that definitely give us a lead up on dollar strength. The Turkish lira, once again, is pressuring resistance. We had a buy signal here in the Turkish lira a while ago. This is also a 3 inside out buy pattern, which you can read about in the book High Probable Japanese Candlestick Patterns. We have almost reached the target. It's been a grind higher, but this market has been grinding higher for months on end. It has had some, when it does swing, this market does get some big moves. I'd be very leery of this market. I use this more as an indicator. Trading this market's really rough because the spread is so wide getting in and out that you're always giving up a huge edge. But if you can catch, if you have the resources and the wherewithal, you can ride this for some very big moves. Let's see what's going on with the US dollar, Mexican peso. This is another market that we had a buy signal in a couple weeks ago that manifested itself and hit the buy. It had already hit the targets. So we had this bullish engulfing line here that had already hit its target, and now we're looking at a possible breakout again and an extension to the upside. This market has been in a bear market for quite some time, except for February, where it exploded to the upside, went and consolidated, and then fell out of bed over the past month as the dollar was getting beaten up. And this is another reason why I think we might start to see some dollar strength rear its head, is that, like it or not, these other currencies that have pressured the dollar, there's a lot of geopolitical influences that have been going on, and there's a currency war that's been going on. But no matter what, no one can control a market. They can influence it for a certain amount of time. And I think that all these people that have been buying up these other currencies and selling the dollar are now getting caught short, and they have to start to bail because it just doesn't add up financially. So, and I think the dollar is now adjusting, which is showing itself by some radical moves, especially like you see the peso here, how it has bounced significantly over the past week and a half. So considering that the volatility before, and look at how these ranges were, and now we look at what's going on, what does that tell you? It means that there's something going on in the US dollar, and especially in the weaker currency crosses versus the dollar, they can no longer sustain their strength. We have the same thing here in the US dollar Canada trade. We have another bullish engulfing line here, this big green one that occurred. And now we have this rounding out area here. So the question is are we going to take out this high? Should we take out this high? We are definitely on the path to a short-term correction that has the ability to probably get this market back up into where this consolidation range is here. So not necessarily that we're a bull looking to come back to $1.46 or anything like that, but a violation of this high at 136.91 most likely will have this market coming back up towards this $1.40 area. Anything below this high at $1.36.91 has us in a kind of a consolidation range. Remember, we filled this gap right here. The gap is now filled. So that means, do we have to continue on the bearish trend? No, not necessarily. We don't have to at all. We could continue on the bearish trend, or we can turn around and bounce. So our gap is filled. We're no longer looking for this anymore. So we got that, and look at what happened. As we came into it, boom, boom, boom. We trickled into it. We filled it. We spiked, and then boom, we had this bullish engulfing line took us up right away. And as you can see, the low right here, this is a good horizontal line to put in here. The low that we have recently of the week, look at this. It's right there. It's right there. Make that a little clearer for you. Okay, so here's our gap, and here was the upper end of that gap right there, and here just where this had been support, and then it became excuse me, resistance, and then became support over here. Now it's becoming support again, and most likely we're going to have another run at these highs, especially we're heading into rollover expiration. We have triple witching expiration in the equities in the U.S. We also have futures and options expiration coming up next week. A lot of crazy things going on in the currency spreads because of the fact that you have the rollover of the contracts. So with that being said, let's go back to the Euro US dollar where we started off this video and see where we're at. And as you can see, the market's still hanging on resistance. It's actually breaking back a little bit, and it's showing that the dollar is still under pressure. So I want to thank you very much. Please subscribe and follow our YouTube channel, Forex Trading Unlocked, and check us out every day at www.forex-trading-unlocked.com. And if you want to learn how to trade these signals that we were looking at, the high probable Japanese candlestick patterns is the book you should read. Amazon.com in paperback and Kindle versions. Please check it out. And once again, I want to thank you very much for your time and spending your afternoon.